Yeah, and we're seeing Tesla actually regain some of yesterday's losses. It's up about 1.5% in the early going because of this positive analyst commentary. The Lordstown Motors bankruptcy could also be giving it a boost because really I'm taking a look at my watch list now and I'm seeing strength across the board. Barrett is out with some positive commentary on Tesla, calling it a best pick of the year.
Retail investors are heading into the market in full force. Last week saw non-professional investors pour a record $1.5 billion into stocks. The majority of single stock inflow was into S&P darlings Tesla, Apple, and Nvidia.
Tesla has become the number one darling of retail traders, and that's a change from the last couple of years. It was all about Apple and Microsoft.
In this video, new data suggests retail investors are loading up on Tesla stock and have been doing all year. What a surprise. Tesla has officially commenced their first advertising campaign, and Volvo has finally joined the Tesla supercharging party. Also, some really big news posted exclusively to my Twitter subscribers. Lucid are now officially 1.69% less likely to go bankrupt. If you want to see that video and loads of others, plus get early access to my daily YouTube uploads, click the link in the pinned comment to subscribe over on Twitter. First things first, it's official, Tesla has commenced advertising. Shout out to Yashu Sharma for picking this up. Apparently there are 18 ads currently running in a few different regions globally. Just basic text-based search ads on Google. An example, Tesla Model 3 and Model Y, UK #1 best-selling EVs, Tesla Solar, blah, 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 blah. A few more examples as well of different ads running in different regions. And here's the third page. According to Yashu, Tesla is running ads in both the US and the United Kingdom. I had this to say, it's a wise starting point. Text-based search ads are far and away the most measurable form of advertising. Plus, you can iterate extremely rapidly based on the efficacy of the ads, titles, and so on. These ads have very low spend. It's a lot cheaper to run a few ads online than it is to run a Super Bowl commercial, for example. They're very targeted, and ads are shown on the same device as consumers can buy the products on, so there's no friction. Very different, for example, to a newspaper ad where somebody reads the ad and then has to go to a different device to actually look at the products and buy them. This will also produce good insights for future campaigns. Just in case you're not following me on Twitter or haven't already checked, I did post a video update on this. A lot of people are embarrassing themselves and making it quite clear they suffer from mental delusions. Don't see reality for the way that it is. But I just want to make sure that this is on the record on YouTube as well. My thoughts on Tesla advertising remain entirely unchanged. I strongly oppose Tesla advertising. I would prefer them to use literally 100% of their energy to make their products better and cheaper. Not 99.9%, 100%. As I said in the past, it's inevitable at some point Tesla would advertise. I just don't want them to, at least not yet. But guess what? Just because I want something or don't want something doesn't mean that's what Tesla's going to do. Now that they are advertising, these are my thoughts. My thoughts on Tesla advertising and advertising in general remain entirely unchanged. For those who don't know, I did actually work in an advertising agency for more than half a decade. And as I've said from the outset, advertising works. Not only could this help Tesla sell more products, assuming they weren't already production constrained, which they are, so that's not the point, but also likely be able to sell those products at a higher price point. My thoughts have not changed. This all remains true. Advertising works. This could help Tesla sell products at higher price points, and I still strongly oppose Tesla advertising. I've seen a number of people say things to the effect of, Stephen, you were wrong regarding Tesla and advertising. I'm still yet to see anybody explain exactly what I was wrong about. My thoughts haven't changed. I said Tesla would advertise at some point in the future. Now they are. I said advertising works. I still think advertising works. And I also said I oppose Tesla advertising, and I still oppose Tesla advertising. I am very curious as to exactly what I was wrong about. Oh wait, nothing. This is a great starting point for Tesla on their advertising campaign. My thoughts summed up completely in this tweet. Rapid iteration, extremely measurable, very well targeted, low spend, zero friction, and this will provide some great insights into the future. What kind of messaging actually works? What's the highest conversion? What's effective? This is no doubt the starting point of a much broader advertising campaign, which I still oppose.
Well, sticking with the EV space, today we've seen some winners and some losers. As Lordstown files for bankruptcy and Ford announces layoffs, Tesla, meanwhile, continues to win as Volvo joins its ever-growing network of superchargers.
That's right, Volvo now on the Tesla supercharging bandwagon. This tweet from Tesla Charging. Welcome Volvo owners to superchargers across North America. And by the way, let's click through and read this. It's quite interesting. This was inevitable. Tesla posted this on their website back in November 2022, opening the North American charging standard. With more than a decade of use and 20 billion EV charging miles to its name, the Tesla Charging Connector is the most proven in North America, offering AC charging and up to 1 megawatt DC charging in one slim package. It has no moving parts, is half the size and twice as powerful as the combined charging system connectors. In our pursuit of our mission to accelerate the world's transition to sustainable energy, today we are opening our EV connector design to the world. We invite charging network operators and vehicle manufacturers to put the Tesla charging connector and charge port, now called the North American Charging Standard, on their equipment and vehicles. Blah, blah, blah. So, this was inevitable and obvious. Tesla's like, hey, we're opening up this thing. You can use it. Please use it. Stick the chargers, the ports on your vehicles. Go for it. We're just trying to help EV adoption. And now, one after another, the announcements are coming from automotive manufacturers who have brains and are realizing, okay, good idea. Let's not reinvent the wheel. Let's just get access to Tesla's chargers, use their technology. It's the best. It's the industry standard. More announcements definitely coming soon.
Following suit of major manufacturers. With more insight, let's bring in Greg Migliore, the editor-in-chief of Autoblog. Greg, let's start with the Lordstown story because, this is a pretty short run, even for a startup. Founded in 2018, filing for bankruptcy 5 years later. How much of this is specific to Lordstown? How much of this is a symptom of what's to come in the EV space?
Well, I think this is a really indicative of how, startups can basically fare if they don't have the capital that's required to maintain the momentum. There's an old saying in the car business that you need billions, not millions. Lordstown barely had millions. They were trying to get that $170 million investment from Foxconn, and that was like lifeblood. $170 million is like change of the seat cushions for Ford or Tesla or Toyota. So they didn't have the capital that they needed to make a long-term go of it. So we'll see. I think there's a lot of startups out there that do have compelling products. They just need to have the business case. They need to have that customer niche to have that staying power. And as you can see, Lordstown didn't really have it at this point.
Greg, do you think Lordstown has some assets that some of the larger players within the space would be attracted to, would be interested in?
They have an electric truck that is fully formed. I've driven it. I'm one of the few people who have and maybe ever will. We'll see. It's a decent truck. It has a respectable electric range.
Hold up there, bro. Respectable range? Are you fucking kidding? This from Sawyer Merritt. The 2023 Lordstown Endurance EV EPA range has been revealed, and it's terrible. Equipped with a 109 kilowatt hour battery pack, aka a gigantic battery, gets just 174 miles of combined EPA range. 174 miles. The energy consumption is a miserable 48 miles per gallon equivalent. For reference, the Hummer EV, which is even bigger than your girlfriend, 40% larger than the Lordstown Endurance, weighs 40% more and gets 47 miles per gallon equivalent. This is some of the most embarrassing, abysmal range in any electric vehicle ever. This is not respectable. This is laughable. This is embarrassing. When I heard this news, I couldn't believe how bad this vehicle was. A little bit of context here. The Rivian R1T, miles per gallon equivalent, 68. Ford Lightning, 68. Model X, 102. Model Y, 129. There's nothing respectable about this range.
Yeah, and we're seeing Tesla actually regain some of yesterday's losses. It's up about 1.5% in the early going because of this positive analyst commentary. The Lordstown Motors bankruptcy could also be giving it a boost because really I'm taking a look at my watch list now and I'm seeing strength across the board. Tesla up 1.5%, Rivian up 2%, NIO up 4.5%. Lucid up 4%, even Fisker up about 2% right now. So it could be tied to Lordstown Motors bankruptcy. But Baird is out with some positive commentary on Tesla, calling it a best pick of the year.
So Baird claiming that Tesla stock is the best pick of the year. Who might argue with that, although maybe replace year with decade.
And just to kind of, remind everyone, Tesla got its fourth downgrade yesterday from Goldman Sachs in a week. So the sentiment has definitely been turning a bit more cautious on this name, but Baird is holding firm that it's a top pick for the year. The analyst made no change to his outperform rating, and this, of course, comes ahead of its production and delivery figures, which are due out this weekend.
Isn't that a pleasant surprise? A bit of a contrarian on Wall Street, an analyst who actually has a brain and a pair of nuts and uses them. Many of Baird's Wall Street colleagues this week downgrading Tesla stock. Why? Because the stock went up. Increasing price target. Why? Because the stock went up. Meanwhile, Baird, no change. Why? Well, apparently, balls and brains are in play, and that means no change. Isn't that amazing? You know who else's fair valuation for Tesla stock hasn't changed? Mine. Did I just suggest that I also have a brain and balls? Maybe I did.
He does tell investors in a research note that he's cautious heading into those numbers because sentiment for the quarter is pretty negative. But he thinks the results will be a de-risking event. Also sees it as a low point for gross margins. Of course, gross margins going to be a key figure, the outlook for that. So Baird has a $252 price target on Tesla, which implies about $10 upside from where it's currently trading. Meanwhile, we also heard from Piper Sandler on Tesla this morning. The analyst there is expressing some caution heading into these delivery numbers and actually looking later out into the year, saying regardless of the outcome this weekend, we wouldn't be surprised to see profit taking in the coming months. Keep in mind, Tesla up almost 100% this year. Also warned about some operational hiccups. That said, he stuck with his outperform rating and $280 price target. So
and with the best
still
pick
bullish.
label too.
Yeah,
with like kind of some major caveats to it though.
True, but obviously
taking risk. Other
hurdles?
It's
up 100%. Who wouldn't be taking profits at some point when you're really looking at those kind of gains?
So to answer the question, who wouldn't be taking profits on a stock that's up 100+% year to date? Investors who believe that there's a lot more growth ahead for the stock and aren't beholden to short-term judgment on their performance over short periods of time. You know who would be taking profits on a stonk that's up 100+% year to date? Institutional investors, the big money. Why? Well, we've got to lock in some performance for this quarter, which ends in a couple of days. We saw a lot of this, I believe, toward the end of last year. Anyone remember when Tesla stock was down nearly 80% from all-time highs? I personally believe a huge amount of that was down to the fact that many of these big funds were trying to lock in some gains for the full year and or exit out of certain positions to have a clean slate. Then, miraculously, 2023 rolls around, blank sheet of paper. We need some returns. Let's buy back the exact same fucking stock that we sold last year for massive losses, which is now likely to surge. Of course, I don't know that happened, but I speculate it's probable.
But sticking with the outperform rating, did also note that his estimate for delivery numbers for Q2, 469,000, actually may be a tad high.
All right, so let me know in the comments below. Do you think that this is an actual legitimate estimate, or it's been slightly rounded just for the lols to 469,000? I appreciate seeing some analysts, some folks with a little bit of a sense of humor.
FactSec consensus is for around 445,000, so maybe just setting the stage for some potential disappointment. Going to also be focused on the gross margin outlook, saying prices have been stable, but price cuts in Q3, if any, could reignite concerns about margins. So Tesla shares actually basically flat now, so gave up the 1.5% gain that we talked about. So now still down about 6% on the week, but still up almost 20% in June.
Okay.
And now a brief interview with everybody's favourite politician in CEO's clothing, Mary Barra, who's going to be asked some slightly difficult questions about GM and their EV strategy, and is likely to dodge them like Neo dodging bullets in The Matrix. Of course, I could be wrong. I haven't actually seen what Mary has to say yet, but I have a relatively high level of confidence in this prediction. She's got quite the track record of not answering questions directly if the answers are awkward, and GM themselves are extremely likely to be going bankrupt, have been scrambling constantly over the last half decade or so to launch an EV or tell people they're going to launch an EV or produce an ad for an EV people can't buy yet and run it during the Super Bowl, and have been busy stealing Tesla's valor, colluding with the corrupt president of the United States, and just embarrassing themselves.
It said the challenging macro and shifting powertrain strategies are wreaking havoc on product planning in the EV space. This is cars broadly, not necessarily just GM. There's a significant acceleration of EV launches, greater uncertainty around new internal combustion engine launches, and likely more last-minute product cancellations. The next 4 years plus could be some of the most uncertain and volatile for product strategy ever. You agree with that?
Well, I think when you look at General Motors, it was back in 2018 where we said we believed in an all-electric future. We were already working on what our platform is, Ultium. And so we know the portfolio. Now, we keep looking, and I'll say adjusting it and tuning it as we see what's successful. But, when you look at the fact that building on the Bolt EV and EUV, the Hummer truck and the Hummer SUV, the Silverado EV, the Chevrolet Blazer EV, Equinox EV, the Cadillac Lyriq, the Celestiq. I mean, we have been working on a very thoughtful portfolio to cover the main segments. We're not trying to recreate our internal combustion engine portfolio. We're looking at the strength of the brands, what consumers expect, and what they tell us they want. And so I think we're going to have a very robust portfolio.
You've talked about 2035. Mm-hmm. Zero combustion engines, really?
Zero light duty.
Zero light-duty combustion engines.
Right.
Yes, you heard correctly. GM's CEO correcting Andrew. The GM intends on producing nothing but electric light-duty vehicles by 2035. That means they still intend on producing heavy-duty vehicles that aren't electric. What could they possibly be? Well, the only real options there are internal combustion engines or hydrogen. Given the fact that it is extremely obvious at this point in time that any company who thinks they'll still be producing any ICE vehicles beyond 2030 will be bankrupt before 2030, I do not think these comments will age well. I suspect in the near future, the longer it takes, the more dire the situation for government motors. They'll be rapidly reeling in their 2035 target of just light-duty vehicles to all vehicles by 2033, and then 32, and then 31, and then 30, and then they'll be filing for Chapter 11 bankruptcy, like Lordstown Motors have just done. Of course, I could be wrong, but when I'm not, I will be here to revisit these videos. GM are going bankrupt. They have an incompetent leader, at least in my uninformed opinion.
Right.
So Mike Wirth is here from Chevron.
Yeah.
So if you are him listening to that, do you think you're sitting there saying, I believe her and I really have to change my plans completely, or this could actually take a lot longer?
Well, I think first you have to remember the car park in the United States alone is 250 million vehicles. So even when we say in 2035 we're going to sell all light-duty vehicles will be electric, it's going to take time after that. But I know Mike Wirth, so I think he believes me. And that's what GM's going to do.
Right.
But, from a full-line manufacturer that is both internal combustion and EVs, we're the only OEM that has said that for all of our brands. So I think it's a commitment that we're making.
You've also talked, though, about the challenges of producing cheaper vehicles, so $30,000 to $40,000 vehicles, and doing that profitably.
Right.
That's going to take till when now?
Well, a lot of the vehicles that we're putting out right now as we get to scale, because we've brought battery manufacturing inside, we have plans, and we've said, I don't talk about individual product line profitability, but we're on track for 2025 to be in that low mid-single digits, and that's before IRA.
Right.
And then we've said, later in the decade, we're going to be at parity with ICE. So
For those of you keeping score at home, Mary Barra may have actually said the most honest thing I've heard in a long time. Later this decade, presumably in the second half, if not the final third or even quarter of this decade, GM are hoping, aiming, planning, doesn't mean they'll get there, on having electric vehicles available for consumers to buy in the United States that are at price parity with ICE vehicles. Tesla's already at price parity today. And earlier this year, they unveiled plans for a 50% cheaper, compelling electric vehicle. Half price from price parity. And GM is aiming to reach price parity later this decade. Now, I'm no expert, but if I engage my very small brain and think about this for a moment, Tesla's at price parity now. A few years, they'll be mass producing a vehicle that's half the cost of their already price parity vehicle, and GM isn't going to even get to price parity on any vehicle until later this decade. How exactly does GM intend on selling electric vehicles at scale in the interval between now and later this decade, and not going bankrupt in the process by selling them for tens of thousands of dollars less than they actually cost to produce just to compete with Tesla's extremely affordable, compelling electric vehicles on price? I'm pretty sure the answer to this question is they're fucked. They ain't going to be able to compete, and they will be going bankrupt before 2030.
a lot of it is going to rely on continuing to improve battery chemistry and getting cost out of the battery, because that's where the cost opportunity is.
But is the idea that there will be vehicles that you will sell effectively, unprofitably, to seed the market, if you will?
I would say, we're going to where we know the consumer has to be to get to the volume, and we're going to drive to profitability as quickly as possible. And then when you put things like IRA on top of it, along with the software services, I think we're going to see profitability even in those affordable vehicles more quickly than anyone's expecting.
And all of
Masterful deflection. What do you expect from a politician in CEO's clothing? Andrew Sorkin effectively asked Mary, are you going to sell electric vehicles for losses until you can produce them profitably, just so you can compete on price? And instead of answering the question directly, Mary just deflects masterfully. Now, why is it that Mary would be unwilling to tell the truth? They have to do that, otherwise they have no hope at all of surviving. Although while doing that, they probably have a very low chance of surviving too, because you can't really sustain catastrophic losses on high volume vehicles for an extended period of time. I personally believe the reason Mary will not say this out loud is because her investors would shit the fucking bed, which is kind of an indictment on GM's current investors that they haven't already figured out that this is what's going to happen anyway.
this you think is now going to happen even faster because of your deal with Tesla in terms of the charging stations?
Well, I think what was important there was we had access, General Motors customers had access to about 13,000 chargers in the U.S. That doubled it.
Was there like a moment you're like, oh, okay, we're doing this. It might be the right decision, but it's hard.
All right, ladies and gentlemen, place your bets. Will Mary Barra directly answer this question, or will she once again deflect? Place your bets now.
I would say I think one of the things our industry could do is partner more. We've done partnership deals with Ford in the past on transmissions. We have a partner on many things right now with Honda. I think our industry could be even more efficient. And we saw this as an opportunity for General Motors. We were able to save $400 million.
But can you take us behind the scenes? Does Elon Musk call you up on the phone and say, hey, Mary, you want to do this?
We actually text each other.
You have a texting relationship?
Yeah,
not Signal, it's text, straight?
I mean, we've met before on a handful of occasions, and we text each other.
No DMing on Twitter now?
So I texted him.
It just so happens some random guy with 3 first names on Twitter apparently has a copy of the full and very legitimate leaked transcript from Mary Barra texting Elon Musk below. Let's read. Mary, hi Elon, it's Mary Barra. I'm from GM. Just got done with the POTUS and the UAW's eggplant emoji. I wonder what that means. What do I need to do to get the Ford deal? Elon, happy to help. Same deal for GM too. Must do live announcement on Twitter Spaces. Mary, okay.
Let me ask you about autonomous vehicles and Cruise in particular, which I know you're very excited about. And you're adding a number of cities, including Houston. Mm-hmm. You've talked about this being a $50 billion revenue business. Mm-hmm. In less
2030.
But that's 7 years from now.
Exactly.
This is about $1 billion business today. Not even. It's I'm sorry.
Business we've said by 25.
Uber is basically a $30 billion business annually. Just help us with the numbers.
Well, I mean, I think when you look at, you open up the addressable market when you get the costs down. And if you think about in today's rideshare, what the most expensive component, it's the driver.
Right.
And when you replace the driver with technology, and Cruise has all their technology roadmaps to get the cost out of what that vehicle would be, I think we're going to get the cost to a very reasonable point, which will open it up. And then when people see the quality of the ride, when they get in an Origin, and you can share rides but really have your own space, or it can be space for yourself. And then you look at the opportunity for personal autonomous vehicles. Right. It opens it wide up. So having now taken several rides and knowing the plans, I couldn't be more excited about the growth opportunity for us.
Well, I for one look forward to revisiting these comments in a few years' time when Tesla's operating robotaxis globally.
Retail investors are heading into the market in full force. Last week saw non-professional investors pour a record $1.5 billion into stocks. The majority of single stock inflow was into S&P darlings Tesla, Apple, and Nvidia. That's according to data compiled by JP Morgan.
Tesla has become the number one darling of retail traders, and that's a change from the last couple of years. It was all about Apple and Microsoft. Right now, it's more about Tesla and Nvidia, with Apple being the third wheel.
Well, surprise, surprise. Tesla stock very popular among retail investors in 2023. Wonder why that could be. Is it possible that nothing fundamentally changed about the company, their competitive advantages, their technology, their leadership, their engineering, yet the stock itself was down nearly 80% from all-time high closing prices at the beginning of this year? Oh yeah, that's exactly what happened. Imagine that. It's almost like retail investors on average see opportunity where others may miss it.
So, what we saw out of our clients is the last 3 weeks, they have been very heavily been buying Tesla.
So rarely a dull moment around these parts. Lordstown Motors, as expected, filing for bankruptcy. In fact, as predicted on this very YouTube channel a couple of years ago. Yet another automotive manufacturer jumping on the Tesla charging bandwagon. They won't be the last. Retail investors loading up on Tesla stock this year. Surprise, surprise. And I'd just like to apologize for being completely and utterly wrong about advertising, because in the past I said Tesla would never advertise. Oh wait, no, I didn't. I said they would advertise. I take that back. But I would like to apologize for saying that advertising doesn't work. Oh wait, no, because I said advertising does work. But I definitely would like to apologize because I've changed my mind and now I support Tesla advertising. Oh wait, no, but I don't. I still strongly oppose Tesla advertising. In all seriousness, though, one final thing I would like to say. I do find it quite fascinating that people, whether intentionally or unintentionally, just completely invent a narrative, something that didn't happen, and believe it to be true. I've noticed this as well. Once somebody has a reasonable reach online, it is inevitable that there will be people who say things about them that are untrue, claim they've said something or believe something or did something that is simply untrue. I'm sure many of you will notice quite a few examples of this occurring about Elon Musk. Here's an insight about humanity. It doesn't matter who you are, what you say, your opinion, it doesn't matter. If you reach a wide enough audience, there will be people who say things that are absolutely false repeatedly about you, and there will be people who are dumb enough to believe this. Hearsay, rumors, if you hear something repeated enough, you might believe it's true. This is a sad fact about human nature. Might I suggest a little bit of advice? Don't believe everything you read. In fact, don't believe anything you read unless it is direct from the horse's mouth. And here's another tip. If you ever hear somebody referred to as something, just some random examples, racist, misogynist, anti-vaxxer, homophobe, transphobe, etc. If you hear it repeated enough, don't be tempted to believe it just because you hear it repeated a lot. Instead, try to verify if there's anything behind these claims or if these labels are just simply slander. And don't forget to check out the latest content I've posted on Patreon and Twitter with the links in the pinned comment. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point and something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy. Wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it. You'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, snake oil salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment and please let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links at the pinned comment, see you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.